This is Akashvani. In the program Money Talk, now we bring you a discussion on India's Manufacturing Purchasing Managers Index, opportunities and challenges. The participants are Anil Padmanabhan, Economic Analyst, and Anubha Rohtagi, Anchor.
India's manufacturing activity continues to maintain its growth momentum, with the S&P Global's Manufacturing Purchasing Managers Index, or PMI, posting 57.7 for the month of July. A reading above the key level of 50 indicates expansion in activity. To discuss the significance of this important economic indicator, we are joined by Economic Analyst Anil Padmanabhan. Mr. Padmanabhan, welcome to the program.
Thank you.
Mr. Padmanabhan, manufacturing PMI for the month of July has shown a healthy pace of expansion. In fact, the gauge of manufacturing sector activity is above 50 for the 25th month in a row. What are the factors that have led to this healthy growth?
See, it's a convergence of circumstances which have come together. A good convergence, I would say. So if you go back, actually, like you rightly pointed out, it's a continuous trend we have been witnessing for quite some time. So if you go back, you will see that there were several economic reform measures that were undertaken. Then the global conditions became inclement. So domestic rearguard action in terms of the free food grains, a lot of these steps were taken. So there was a build-up, an economic policy build-up, which was happening simultaneously even as global conditions became adverse. So you are now beginning to see the outcome of all these circumstances. And I must definitely add, since we're talking about manufacturing, the balance sheet cleanup, particularly for both banks and companies that have been undertaken over the last 5 to 6 years, have definitely contributed to this circumstance where we are seeing the PMI rising steadily.
The July's PMI, well, it is 57.7, but it is slightly lower than June's 57.8. What are the factors that led to this slight lowering of the PMI in July?
See, it's an index, so there will be kind of marginal movement here and there, and we should take it not in absolute terms, but as in trends. And it's like a bellwether index. So and being an index itself, it is just a representative of a direction of change. So anything above 50, like you pointed out earlier, shows an expansion in the economy. So what the PMI in this case of manufacturing, what it is showing us, it is giving us insights into the state of the economy in general and the manufacturing sector in particular. So a growing PMI, even though there's a slight dip, suggests that the purchasing managers who are surveyed are reporting good purchases, which means they are buying inputs, etc., to create more manufacturing. So, which means the underlying conditions are very positive.
So, all in all, it's not a cause for worry because it's like I said, very, very slight lowering of the PMI from the previous month. So, not a cause for concern overall.
No, not at this stage.
The PMI report also says that new export orders picked up at a pace that was the fastest in 9 months since November 2022. Businesses are reporting increase in fresh orders from the US and neighboring countries like Nepal and Bangladesh. That's a good sign for India's merchandise exports, isn't it, given that fact that we've been seeing slowdown in this area for quite some time now?
Yeah, I would say any growth is positive, but I would temper that because please keep in mind that last year was a bad year. So you're comparing not likes to likes, but the fact that it is not declining is great news. But it's not where it should be. So yes, it's a positive sign, but we should not read too much into it.
While not reading too much into it, as you just said, but the fact of the matter is that any kind of an increase, whether it's, from a lower base or whatever it is, a higher export orders would also mean that it pushes up employment, and which is what, again, firms are reporting that, they are hiring more staff to take on the increased workload. So that is also a continuation of trend that was seen in May and June. So if the demand remains strong, do you expect the employment trend to continue in the coming months as well?
Yes. See, the demand is made up of one, like you said, export demand and domestic demand. Domestic demand overwhelms export demand. So the fact is that it's incremental gains. Yes, if both keep growing, at this point, we don't see why consumer demand will not grow, particularly now that we are on the eve of the festival season. So demand will grow, which means employment will grow. And the economy will continue to grow.
Now, the latest PMI number that we have seen for July, the GST collection for July, which have come out today, and the fact that India's core sector growth, which hit a 5-month high of 8.2% in June, and then the January-March GDP of 6.1%. All in all, these figures show the robustness of Indian economy. How significant has been the role of various initiatives and schemes of the government in all of this?
Oh, very important, because that's what I said right at the outset, that if you take it at this point of time, it will be a little out of context. So you need to go back and you will see that it's an iteration of several policy initiatives from all fronts. It's actually a rare moment when monetary policy, fiscal policy and industrial policy, everything was aligned. It's a happy circumstance, because normally fiscal and monetary policy, recent history of India has not been a little divergent. But over the last, say, 8 to 10 years, there's been a tremendous convergence of the two, particularly in the post-COVID phase, which is very, very important. So if you go back just 3 years, you have had 3 economic shocks, which is unprecedented in economic history. You had once in a century pandemic, then followed by the Russia-Ukraine conflict, which disrupted global supply chains, unleashed inflation. Then you had the fastest interest rate tightening by the US Federal Reserve, which did 2 things. One, it exported inflation from the US because the US currency appreciated, which means currencies like the Indian rupee, every other global currency depreciated, which means you imported inflation. So it added to the inflationary pressures. Now all of this had to be dealt with only by a coordinated effort. And that is what has really laid the foundation for what you are seeing today.
Now, though it's good news on the manufacturing unit, and we just discussed that the GST figures for July have come out, which are very good. Yet we have also seen an increase in retail inflation in recent months due to rise in food inflation. Now, if this rise continues in inflation, which is being predicted and which is what a lot of analysts are fearing, will it impact manufacturing activity?
Oh, yes, definitely. See, inflation goes up, the monetary policy will tighten. Minute monetary policy tightens, you have interest rates go up, which is nothing but the cost of capital, which means the industry will find it costlier to finance their investments. So they most often, if they see there's no market for it, they will not invest, which is a piece of bad news, because since 2008, investments have been held from Indian private sector mostly. So yes, if inflation goes up, it's bad news overall for the economy and manufacturing and consumers, of course.
Mr. Padmanabhan, the economics director at S&P Global Market Intelligence, Andrew Harker, has said that the Indian manufacturing sector has maintained its position as one of the star performers globally, bucking the trend of demand weakness seen in other parts of the world. How much do you agree with it? Because we are seeing that, of course, now they are saying that the fear of recession, that this threat of recession is no more over the US or even Eurozone. But would you agree with this, what Mr. Harker has said?
Oh, yes, there is no doubt about it. It's a relative comparison that he is making. At this point of time, India is a lighthouse in the world economy. And if you look at the PMI for comparative economies like whether it's China, Japan, Vietnam, Philippines, India is way ahead of them. And some of these economies like, say, South Korea, which is a very big economy, is below the level of 50, which means they're contracting. So he's absolutely spot on. In a relative sense, India is much better off. But in this trend, if it continues, it's not good news, because, not that India's performance, but if global economy does not recover, then eventually it will start becoming a burden even on the Indian economy, because the export markets will not pick up the way India wants it to.
Now, the robust PMI numbers will be welcomed, of course, by policymakers. But what do you think is the need of the day? What do you think needs to be done more by the policymakers and the government so that this growth that we are seeing overall in our economy and manufacturing sector, to be specific, that it continues?
See, there are 2 things that they have to do. They have to continue to do what they're doing right now, which is obviously being worked out very well for India, the strategy. Second, the entire initiative has to now start involving the states. And the center has done a lot of the heavy lifting on economic reforms, but some of the states are laggards, not necessarily due to politics, but sheer capacities are also missing in these states. So the center will have to kind of handhold several of these states to ensure that the momentum that we are witnessing nationally continues only if the states who are now laggards start pulling their weight too. So overall, as a strategy, everything is working, But at the disaggregate level, some of the states are stalling, and some of the reforms initiatives need fresh impetus, particularly from the state level. So you see, the economy is like running a car or an automobile. It's not that once you buy it, you forget about it, you don't service it. You have to continuously keep servicing the car. Progressively, as it grows older, the servicing becomes more frequent. But in this case, India is transforming. So which means more and more changes are coming, more and more challenges are coming. So there is no time that any government or any policymaker can relax. It is like being on a treadmill all the time.
Right. And earlier you were talking about the need for the center to handhold the state governments if we want to, continue with this momentum in manufacturing and if we want our economy to continue to grow at this healthy pace. So can you give us more details about it? What kind of handholding, what kind of initiatives are needed by the center?
See, it is a give and take. Let's take the GST, for example. A little bit of history. The GST was made possible largely thanks to the leadership of the late Arun Jaitley, who obviously with the backing of the entire government offered the grand bargain, which, promised that any loss in revenues would be made up by the union government, plus they guaranteed a 14% revenue growth every year. Now that is what brought everyone on the same page. It was the key tipping point. Now, I believe you are looking at a similar grand bargain in the case of GST, because the states very uneasy to reduce rates. If you don't reduce the rates, the number of rates, there are too many slabs. So it's stripping up ease of doing business. So industry is already complaining, but they do it sotto voce. They don't do it publicly, so you may not hear about it. So if that has to happen, the center and states have to come together. The center has to take an initiative. It has to incentivize this. It has to talk to them politically. So that is one example. The other is, taking the whole issue of ease of doing business to every state, every district, every part of India. The infrastructure is slowly coming in place. Many may not know, but the rural road network is almost reaching saturation levels now. In India, they have added about, 400,000 kilometers in the last 5-6 years, which is fantastic in the pace. Then the broadband connectivity is now reached 60-70% levels as far as most districts in the country. You already have a national digital infrastructure in place, which is through which you are implementing, including GST, ONDC, UPI, and a range of these things. So all the blocks are in place. Now you need to execute certain pending actions, some of which I've listed. There are many more.
You just mentioned the challenges that India may face in the coming times. So can you give us more details about the kind of challenges that we may come across so far as our economy is concerned and the manufacturing sector is concerned?
One big challenge which is facing India is the world economy. So the inclement conditions, particularly whatever is happening in China, is not good news for the world and India. So how the global economy shapes up is important. Second, the ongoing geopolitical reset that we are seeing, we don't know which way the dice will fall. So at this point, India is on top of the game. But these are very fluid circumstances, so they can change any moment. So that's another risk from that level. Domestically, I just mentioned to you that there are several reform initiatives that this country needs to undertake. Let's take, for example, the GST, which has been a fantastic experiment. It is for the first time that India unified economically. Otherwise, any manufacturer had to traverse 36 sovereign territories before they sold anything in this country. So all that has gone away, but there are many parts of it that need to be fixed, particularly with respect to rates. There are too many rates. There are two key commodities still outside it, which is alcohol and petroleum products. So all of these actions cannot be delayed, and which means it's a three-legged race. The center and the states have to run together, and they need to come together.
Thank you so much for speaking to us, Mr. Padmanabhan.
Thank you.
You were listening to a discussion on India's Manufacturing Purchasing Managers Index, Opportunities and Challenges. The participants were Anil Padmanabhan, Economic Analyst, and Anubha Rohtagi, Anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 928 909 4044.